After months of uncertainty, the stock market is showing signs of life again. But is this bounce back real or just a temporary illusion? Throughout 2024, investors faced a roller coaster of economic shifts, rising inflation, interest rate hikes, and fears of a global slowdown. By the end of the year, market sentiment had hit one of its lowest points since the pandemic. Companies scaled back, consumer confidence fell, and investors pulled out in panic. But 2025 has started with a surprising turn. The markets are moving up, and moving fast. What's fueling this recovery? Several major indicators are flashing green. Unemployment rates have slightly decreased, consumer spending is up, and corporate earnings in the first quarter of 2025 exceeded expectations across multiple sectors. Sectors like technology, energy, and healthcare are showing a renewed growth pattern. Big players like Apple, Microsoft, and Tesla are regaining ground after last year's drop, and even small-cap stocks are drawing attention again. Analysts believe this recovery may be tied to aggressive monetary policies. Central banks around the world have softened their stance on rate hikes, and some are even hinting at possible rate cuts by Q3 of 2025. These shifts are injecting optimism back into both institutional and retail investors, who see this as a chance to regain lost ground. Investors are now pouring money into mutual funds, ETFs, and even riskier assets like cryptocurrency. But is this optimism justified? Not everyone is convinced. Some experts warn that the bounce back could be a bear market rally, a temporary upward trend within a longer-term decline. They argue that many global risks still loom large. For example, geopolitical tensions between superpowers haven't eased, global debt is at an all-time high, and the commercial real estate sector is still under immense pressure post-pandemic. Another reason for skepticism is that while stock prices are climbing, economic fundamentals haven't fully caught up. Many companies are still laying off workers. Supply chain disruptions remain unresolved in key industries. And even though inflation has eased slightly, it remains above target in most developed economies. This disconnect between the stock market and the real economy is what makes some economists nervous. Despite the risks, the bullish narrative is dominating headlines. Social media influencers, financial analysts, and even major investment firms are promoting a buy-the-dip mindset. There's a growing fear among investors of missing out on the recovery. This FOMO is leading to a surge in trading activity, with platforms like Robinhood and Coinbase reporting increased user engagement. Meanwhile, AI and automation continue to revolutionize the market. Algorithms are executing trades faster than ever, reacting to microtrends that humans often miss. This has made the market more volatile, but also more profitable for those who know how to play it right. Retail investors, especially Gen Z and millennials, are relying on tools like AI stock pickers and robo-advisors to guide their portfolios in 2025. Government policies will also play a big role in sustaining, or shaking, the market bounce. The upcoming election cycles in major economies could impact trade agreements, tax laws, and fiscal spending. If policy uncertainty returns, markets might respond sharply. On the other hand, business-friendly reforms could fuel further optimism and solidify the recovery. So, what should investors do now? Experts suggest a balanced approach. Diversify your portfolio, don't chase the hype blindly, and keep an eye on global economic indicators. The 2025 stock market bounce back could be a golden opportunity, but only for those who stay informed and make rational decisions. In conclusion, the signs are promising, but the journey isn't over. Whether this market recovery is a long-term trend or just another temporary spike remains to be seen. One thing is clear, 2025 is shaping up to be a defining year for the global economy, and how you respond to it could shape your financial future.